NVIDIA and the AI-powered rally showing little sign of slowing today, with the chipmaker hitting an all-time high. The NASDAQ closing above 17,000 for the very first time. NVIDIA is up nearly 20% since its earnings report just last week. And check out some of the other names in the chip sector hitting all-time highs today. Micron, NXP Semi, Qualcomm, and Texas Instruments. So, should investors count on NVIDIA to keep driving the market higher? Joining us now is Fundstrat's head of research and CNBC contributor, Tom Lee. Tom, good to see you. So you're still bullish heading into June. You say there's too little investor confidence, too much cash on the sidelines, but it seems to be flowing in now. So how do you invest and not get burned by volatility?
Well, it has been one of those years where, investors have been hesitant all year, and I think we have had some short pullbacks, but I think the best strategy for investors is to really stick with what's working. And what's working is AI-related names, whether it's NVIDIA or highly correlated stocks like Cadence or Supermicro. The Ozempic-related trades, industrials, financials are doing great, and the Bitcoin and the proxies as well as, I think, a growing small-cap stealth rally. So I think there's still a lot of ways to be invested in this market.
The small caps have been hot to the touch, though, not in a good way, especially with yields occasionally spiking. So are there certain areas within small cap that you'd say average into, or how are you treating them compared to the mega caps?
Well, small caps, I think, have been very sensitive to the probabilities of a Fed cut. So I think they're very sensitive to actually when the Fed begins cutting. And, the last few comments from the Fed have actually hurt small caps because the odds of a June cut have been pushed out, and maybe, the odds of a September cut are, diminishing. So I think that weighs on small caps, but it doesn't take away from the fundamental attractiveness of small caps. Earnings growth is close to 19% in the median Russell 2000 stock, and the median PE is 11 times. So you're getting far better earnings growth in the S&P and a much lower PE multiple.
What's incredible about that, Tom, is the fact that we went from, at the beginning of the year, a market that was aggressively pricing in this flurry of rate cuts to now a market where stocks are continuing to move higher as investors digest the possibility, or I guess are hoping for the possibility, that we have a Fed that doesn't raise rates again before the end of the year. That seems to be the thing. That's sort of being taken as the thing. Every time Powell or somebody else comes out and says, oh, we think the peak is in, we don't think we have to raise again. We've really seen an incredible pendulum swing, and it raises the question, how much now hinges on earnings if that's going to be the scenario?
Well, I think that's spot on. First, the number of expected cuts has shrunk, but it's really shrunk for the right reasons. The economy's been good. Inflation is progressing, maybe not the speed anyone would like, but the reality is, 3% or even 7% inflation is really good for corporate profits. So I think the earnings outlook actually is far better than most expect. You can see the beats by NVIDIA as an example, but S&P earnings next year, maybe if consensus at 270 something, it might be closer to 280. So you can see why there's upside for stocks.
We just had the S&P close at 5306 today. I believe your year-end target is still 5200. Does it need to come up? How are you thinking about it?
Yeah. Our year-end target is too low because, next year's earnings, if it's 280 and you put a 20 multiple, that's way above 5200. But it's only early June, and I think we're still just deciding whether or not there is a speed bump between June and December. But yeah, I'd say 5200 is too low.
Tom, how do you treat the weight loss and overall health trade epitomized by Lilly? It's up at real highs now, $750 billion market cap, but it's been bouncing around in this range for about 3 months.
Yeah, it's I think a lot of large cap stocks that have been leading show similar patterns of sort of consolidation. And, I think it would be too early for someone to say that, Ozempic and the GLP drugs have peaked. So to us, it's really an opportunity for someone to be accumulating. I don't think it looks that different than NVIDIA into earnings or, many of the stocks that have broken out recently.
U.S. stocks, is that really the place to be right now? Or are you looking abroad as well, especially if you do have an ECB, for example, that's going to cut before the Fed?
Well, it's nice to see other central banks cutting because, from our perspective, inflation probably is tracking better than most expect. But I think the best companies, especially in technology and financials and healthcare, really mostly are in the U.S. So I'd feel a lot more comfortable recommending investors stick with the best companies in the U.S. rather than try to buy something outside the U.S. because of relative valuation.
Alright guys, this is the part of the video where I'm going to break down the stocks that were mentioned in the video. Today there were 9 stocks mentioned. We're going to break them down quickly. It's the SPY, QQQ, IWM, MU, NVIDIA, NXPI, Qualcomm, Texas Instruments, and Eli Lilly. First we'll start with the SPY, looking very bullish. If you don't know, we have the 200-day moving average in green and the 45 moving average in blue. So you can see we're bouncing right off that 45-day moving average, holding it very nice. That's very bullish. You could also argue we're holding this high, and all of this last 2 days was a shakeout. Very bullish. I expect to break new all-time highs soon. Onto the QQQ, basically the same. Looking very bullish. We did have a shakeout day. As you can see, it's still holding this high. Was once resistance, is now becoming support, and I wouldn't be surprised to see this be green and also break out to new all-time highs. The IWM Russell 2000 small cap has kind of been in a consolidation range since back in April of 2022. It is getting towards the higher end of the range, looking like it wants to break out at 212, 215, somewhere in there. If we can get above 215, guys, we are looking bullish and should just break out the top. Now, Micron is looking pretty bullish. That is until you zoom in. You see there's a massive double top right here and then a sell-off. Well, we've kind of double topped here. Hopefully there's not a sell-off. They did kind of shake out, and we have a wick down on this last day, so it still can be bearish. We didn't close with a lower low. We made a higher low. So if we can continue to make this green and get up back above 133s, MU is definitely looking good. Onto NVIDIA, everybody's paying attention to NVIDIA. Super bullish, but look how extended it is. Well off the 45-day moving average, guys, and crazy amount off the 200-day. So a pullback is not that crazy. You can see this wick down. Could argue was just trying to close this gap. If we do start holding this level and break out around 1150, guys, you already know this is NVIDIA, and it's got the earnings to back it up, the hype to back it up, and it's a one of one right now. We also have the 10-for-1 stock split coming, if you didn't know, and a new dividend announced. So they have every single thing they need to keep going higher. Of course, this is bullish. NXPI, a stock I have not looked at, I don't think ever. It is looking bullish. It's at all-time highs. I'm not much of a fan of these huge staircase patterns. It's massive up, massive down, massive up, massive down. We are kind of at the higher end of the range. If this is the pattern that's going to continue to play out, massive downs after massive ups, then this is actually starting to look pretty bearish. Qualcomm soaring up past all-time highs in these last few recent weeks. You can see, but they are getting rejected. Probably a lot of sellers from back here that have been waiting to get out. And so there's going to be a lot of liquidity around this area for sure. But if we can hold the 200, start breaking above 210, 220, Qualcomm is definitely looking bullish. But look how far it is from that 200-day moving average too. So it would make sense to see a pullback. Texas Instruments, this one has been a lot more choppy, a lot more range bound, and is just now getting to the high. I don't really like the pattern on this stock at all, especially for a long-term hold. This is not my type of buy. We are at the top, getting rejected very hard. This last day was kind of a shakeout. We'll see if we can hold 195, but guys, I wouldn't be surprised to see 185 or even 175. This stock is definitely looking bearish. And last but not least, Eli Lilly. Oh my goodness. I don't think there's many stocks that look this good in the market. And even better, a run this insane, and it's holding both moving averages closer than most of the stocks we just looked at. Look how close it is to the 45-day, even with an insane bullish pattern like this. At all-time highs, this stock is going bananas with the new weight loss drugs, guys. Definitely bullish. I hope you guys enjoyed the breakdown. If you did, hit that like button, subscribe to the channel. We do this every single day, and I will see you in the next video. Peace.